Carl, you didn't fare as well as Tony did, but hey, we appreciate your support. Back to the phones. Frank in New York. Hello, Frank.
Hi, John. How you doing?
Hi.
Good. I'd like to vent for a minute, and then I got a question for you guys.
Okay.
I have a credit card, okay? I've always paid it on time. I probably use it for about $15,000 a year because I get the points back. I get $1 on every 100 I spend.
Okay.
So anyway, a couple of weeks ago, I had to get some cash. So I got some cash, and then I realized I was paying on that every day, and it was like 20-something%. So I went in on the Internet, and I followed the directions to make a payment out of my checking account. Okay, so I went through, it said confirmed. 2 days later, I called up. They said I had a credit on my balance. And I said, okay, great, everything took place. So then the next day, I happened to call up the credit union where I have my checking account, and the money wasn't taken out. And I said, well, what's going on there? They claim they got it already, and you guys didn't ship it out. You know, Santa here early this year. And the guy said, well, actually, it takes a couple of days. And I said, okay, fine. So then just today, I call up the credit union to get the balance, and the money's still in there. So I call up the credit card company, the bank, and I explained to them what happened, and they said, well, we tried to get it, but there was insufficient funds. I said, there's always been enough in there. And they said, well, we couldn't get it. So apparently the bottom line is I filled the thing out wrong on the when I tried to pay it on the Internet. But when it came back, when it popped up, it said confirmation. 2 days later, they said they had the payment. So I thought I was okay. So I talked to a guy today, and I said, I've been a good customer, and they could see that. And I said, well, how about relinquishing this interest here that I've been paying for the last few weeks on this amount, which was a little over $1,000. He said, oh, we can't do that. I'm sorry, sir. I said, after all, this is with you. I said, you can't do that? He said, no, I'm sorry, we can't do that. I said, okay, well, I'll just go down the road. I got a few other credit cards to you guys off. But my question to you guys was, if, I got a thing in the mail the other day, for one of these, first time I got one in a long time, too, 3% up front, they'll get cash, and then 2.99 for a year. Now, that comes to 6%. And I was thinking, get $5,000 and go buy some silver and then, make these payments, and I think I should be doing okay. What do you think about something like that? I know you say don't go into debt, but, at that small, an APR, I kind of figured it might be worth it. If silver takes off, I'll be able to pay that thing off.
At 6%, Robbie?
Yeah, look, banks have picked up on that Las Vegas scam. They give you a room for next to nothing, and then they charge you $50 for a beer.
Yeah.
I mean, they just nickel and dime you to death with the fees and the charges, and if you're a day late, they nail. I mean, it's.
You're talking yourself out of a sale here, Robbie.
Yeah, I know.
But I understand. I appreciate your being honest about it. But I was just contemplating doing that. I said, well, I can make those payments rather easily, and if the silver does shoot up there, I could cash some of that in, pay this thing off, and then I'm still sitting there with some silver in my pocket.
It sounds, if you're following this program and you're following the information provided by Mr. Robert Chapman through the International Forecaster newsletter, I would say the better scenario would be have $5,000 and just go out and buy it rather than putting it on a card. But 6% versus
well, see, I can get cash. Okay,
yeah.
I can write myself a check.
Exactly.
Put it in my checking account. Mm-hmm. So then I can take that and go and buy whatever I want.
Right. No,
it's not like I'm transferring balances or whatever.
No, I understand.
But it's good for a year, so I figured I could pay it off in a year either way. But I was just wondering what you guys thought about that, whether it be.
Well, I think that you should do it.
That's what I kind of thought, Bob.
I
thought that way
that.
too.
And the reason why is you're a person of means, and it's not going to put a crimp in your life. The chances of silver going up more than 6% this year are excellent. I think it's a very thoughtful, pliable wager.
And not only that, the thought just occurred to me that this is a great hedge. If you've got the $5,000 to do it with, go ahead and do it, because now you're going to have $5,000 worth of silver in hand versus the proverbial in the bush.
Yeah. I understand totally what you're saying.
Okay.
Hey, gentlemen, thank you for your information, and keep up the great work.
Thank you.
6% is nothing for silver. It was down 4.5% today.
Yeah. All right, Tony in British Columbia. Hello, Tony.
Good afternoon, gentlemen.
Hi.
Robbie, Bob, John.
Yes.
Yeah, but I especially want to thank Bob. He's given me some good advice in the past. what I wanted to talk about today was the price of gold. You guys all say that the price of gold has been disconnected from the USD index and that sort of thing, but I don't think it's been disconnected at all, and it certainly hasn't been disconnected from Goldman Sachs. Now, this is a question I had for Bob. Let me preamble this a little bit. I've been playing the COMEX market now for probably about a year and a half or so. Lost a lot of money on it, and I kind of figured it out about 4 months ago. Where if you look at these guys, they're basically manipulating the market through the use of options, stock options. If you look at the price correlations, the highs and the lows and the expiry date of current options, and the way they go about creating value traps, where they bring it up to a new high and then drop it down 20% and take out millions of dollars by blowing guys out of the market. So, futures traders. I'm wondering if Bob could comment on that, if he's picked up on the same sort of timing. Like right now, gold is trading at 962, and the March option expiries are
Isn't it
March
today?
25th.
Isn't it today? Wasn't it option expiration day today?
No. That was we're talking about the April contracts here.
Oh, okay. Sorry.
Yeah, the April contracts, the heavily traded contracts on the options. They expire March 25th. And if you go through the past, every time it's hit a new high, it's always been about, I'd say about 4 weeks before the options expire. And then they keep the price of gold sort of relatively stable, and they let it increase at such a rate that the options basically don't increase in value because of the time deterioration of it.
And that's true.
It's just like clockwork. I've been
absolutely. They do it every month, and especially on the big dates where they have large amounts of contracts. And the CFTC stands there and does nothing about it.
Absolutely
you just saw the last expiration what they did. Just like clockwork, they took it down, and I think with the 80, the 900s, the 890s, and the 880s. They did it again and again and again in my gold section. I talk about it.
Oh yeah, it's so predictable. It's timing sometimes. I mean, well, they do fool around with it, so it does get predictable. It's I don't know. I could go on and on about this. I have one other question.
Okay, well, let's get a clarification on your point here that you disagree that this is a disconnection here from other commodities. Bob?
Well, I don't think it is. I think they have disconnected. And I don't think they're as strong, relevant factor like they were previously. I think gold's on its own. I mean, last time we ran up to 1,000, there was fear and panic. This time it was more like, well, it had to happen, it's happening, so what, we get a little correction here. And it'll probably go and break through 1,000. And there's a lot of other people who are professionals who think that as well, with the GLD holding 953 tons of gold. You got to be kidding me. I think it's the fifth largest holding in the world, if they in fact really have it. And so there's a lot of professional interest out there. The public's not really in the market. They will be when we pass 3,000.
Well, and again, there is a flight to safety, but those that understand the markets understand how polluted it is, and these people are seeking safe haven. Now, your point here, I'm looking at the 1 year gold. Isn't this fascinating that just yesterday or the day before, 1 year gold, back in, let me see, this is 25 February of 08. We were looking right around at $1,000 an ounce. I think it peaked out at 130, 1,030. Ironically, the other day, it's back up to 1,000. Now we're off a little bit here. It went as low back in November. It went as low as, I don't know, what was it, Robbie? 7.25.
720.
720.
It's a gift.
It's a gift. It's 720. And my point being here, I mean, if I look at the 5 year gold chart. 5 years ago in February, folks, we're looking at gold at 400. It's bouncing around 1,000. It'll get past that point. But every one of these increments you've seen, you see it go up, you see it come down a little bit. You see it going up, you see it come down just a little bit. But the major trend over this market over the last 5 years, $600. If you would have bought gold at $400 and you cashed it in a day for the funny money, it'd be $1,000. So there is a disconnect, and I've been watching this very closely. I will pay further attention to this, but yes, there is a disconnect going on.
And April gold contracts options expired today. Today was April expiration day.
All right.
So now you know why we saw
20.
gold and silver get clobbered today.
Sure.
Yeah.